Hey everyone, welcome back to Corporate Decoder, the place where we dive into the exciting world of corporate filings. Today we're cracking open a report from Wolverine Resources Corp, and trust me, it's less about clause and more about careful accounting. This report might have a few surprises hidden inside. Things are not always as they seem. We're diving into Wolverine Resources Corp's financial report for the last 3 months, ending in February. Forget what you think about Wolverines, this one is all about mineral exploration and the ups and downs of keeping a small business afloat. The big story here, they haven't made any money. This is a Form 10Q, meaning it's a quarterly report. Companies use these to tell investors how they're doing financially, what's changed, and what risks they see. It's like a health checkup, but for a business. The report is for the period ending February 28, 2025. Interestingly, they're still considered a shell company. This is a legal term. It basically means they don't really do much of anything. They just own some assets and explore them and haven't generated a lot of money. The biggest number to keep in mind is how many shares are out there. There are over 125 million shares floating around. That will affect the price. Let's get to the numbers. These are unaudited, which means they haven't been fully checked by outside auditors. The amounts are in US dollars. The report also tells us that the company has never made any money and isn't likely to anytime soon. First stop, the balance sheet. This is a snapshot of what the company owns and owes. The most important thing is cash, but that is zero. Wolverine had almost $6,000 last year. They don't have it now. They have some money coming in, just a little bit over $5,500. What they owe, accounts payable, is close to $80,000, plus another $54,000 they owe to related parties. In total, they owe $13,256 SOs, but their debts are $13,222 and 256. So the assets of the company are $19,10,886, but their debts are $13,2 and 256. Those are the assets of the company are $19,10,866. So the assets of the company are $19,8066 TOF, but their debts are $13,256. So the assets of the company are $19,10,866, but their debts are $132,000 to $80,000 and are looking good in terms of debt. Next up is the statement of operations, also known as the income statement. This shows how much money the company made or lost over the past 3 months. Total operating expenses are $66,678 versus revenue of $0. They had some other income currency, so that offsets some of the loss. Overall, the net loss is about $63,000. The statement of cash flows, this tracks the movement of cash in and out of the company. They lost cash in operations and got a little from financing, which resulted in a net cash decrease of almost $6,000. They start with $5,800 and end with nothing. This is a major problem to keep in mind. The report states that the company explores for minerals. They had thought about cybersecurity, but it sounds like they are back to mining now. The statement also has the going concern warning, which means there's a big question mark over whether they can stay in business without more money coming in. They have debt and accumulated losses. To survive as a company, it will be depend on if their shareholders will provide more funding. The numbers are based on estimates, so the real results could be different. There's mention of looking at things like stock-based compensation and income tax assets. The company spends money on mineral exploration and they expense them as they are used. The company doesn't have earnings per share because they have no earnings. Now let's talk about related parties. This is where things get a bit complicated. The company paid money to companies connected to their own executives. The CFO's company got over $21,000 for consulting. A director of the company is owed $6,000 agreement assigned outstanding receivables to third parties in exchange for shares of stock in the company. Some of these debts are not in good standing. $4,000 CEO Bo. All these related party transactions have shares issued in exchange to settle these debts. A settlement agreement assigned outstanding receivables to third parties in exchange for shares of stock in the company. Some of these debts are not in good standing. Wolverine's main game is mineral exploration. They own some claims which are like licenses to explore for minerals in Labrador, Canada. They've written off some of these in the past, meaning they don't think they're worth as much anymore. The company can issue 250 million shares and they've already issued over 125 million. After the period ended, but before this report came out, a company controlled by the CEO assigned its debt to a third party and had it settled in company stock. They also had an additional money and shared come in. The company isn't currently involved in any legal battles. Here are some risks that the company wants you to know. They need more money or the business plan will fail. They have only just commenced business operations, so there is a high risk that things will fail. Also, they have auditor stating that there is substantial doubt about the company ability to continue as a going concern. Another thing is that it's a penny stock, which makes it more risky. Finally, OTC Markets has placed a shell risk identifier on the company's page. So let's recap. Wolverine Resources Corp is a small company focused on mineral exploration. They're burning through cash, heavily reliant on debt, and facing questions about their ability to stay afloat. They are dependent on shareholder and other external funding. All of that is a red flag. The big problem is that they have zero revenue. Without revenue, all you are doing is spending and hoping for a miracle. Their debts are so far above their assets, which is why the going concern is being brought up. Also, the CFO, director and CEO are all getting consulting fees through another company, which adds complexity. Finally, it is not good that they got labelled with a shell risk identifier. So the CFO, director and CEO are all getting consulting fees through another company, which adds complexity. Finally, it is not good that they got labelled with a shell risk identifier, so I'm going to stay far away from this company. Top, thanks for watching. If you enjoyed, please subscribe, like and comment.